is for Disney.
Why does it make sense to do this? Are you
As the world changes, as the world is disrupted, and by the way, I'd rather be a disruptor than to be disrupted.
have a new strategic investment and partnership you're making?
Yes, we've entered into a strategic relationship with Epic Games, the maker of Fortnite, to not only invest in the company Epic, we took a minority stake.
Breaking news on Disney and Taylor Swift. The Taylor Swift Eras Tour movie to Disney Plus as of next month. And so Disney Plus will be the exclusive home of Taylor Swift's concert.
Disney stock is epically crushing Jeremy Financial Education's 100-bagger Fubo stock.
I'm expecting to be down 7 to 15% tomorrow. ESPN, Fox, Warner Brothers, Discovery to launch joint sports streaming. Oh my gosh, top news on CNBC. Could be bad, scary for one of my stocks, right? Check this out. So, right off the bat, obviously that's really scary for Fubo, because Fubo's known as the streaming network for sports fans, right? And so this Honest money is in that category. But the problem is, Honest has a much bigger risk, in my opinion, and much less of a reward potential than this other stock. So if I'm going to allocate a certain amount of my portfolio to that certain type of 10x, 20x opportunity, it needs to be in that sort of company, okay? And so there is one company that I do feel has that much better risk reward, and it is Fubo. Here's the deal. I put that money in Fubo here today, bought 15,000 shares in the public account of Fubo, right? To me, this sounds like a desperate disaster move. A complete desperate disaster move.
Well, holy smokers, this ain't no dang jokers. I told you Disney wouldn't disappoint. In my last video, when Disney stock was 11% lower than today, I said Disney is now a technology company, especially in ad tech, and I gave my buy rating at the time. Now congrats on the people who are in Disney stock with me. Remember, Jeremy last year sold his Honest Company shares to buy Fubo stock. He also sold his Disney stock as well. Now he is calling Disney CEO Bob Iger, making a desperate move. He said not only Disney stock not going up after hours, it's down 1.3%.
So Wall Street smells desperation the same way I smell desperation here. And this sounds horrible.
That's laughable, Jeremy. Look at this. Disney stock was up 6% after hour, and it was up 13% during the next trading day. Now look at Jeremy's unprofitable quote, 100-bagger Fubo stock year to date. Plummeted 37% back down to $1 stock, while Honest Company is at $3. So clearly Wall Street believes Disney and Honest are making a comeback. Not to mention Taylor Swift is going to be exclusively on Disney. Before I get into the highlights of Disney's wonderful earnings, I just have to say this for Fubo shareholders. I know Fubo has this sports streaming niche going on, while Fox Corp, Warner Brothers, Discovery, and Disney are set to launch a new streaming joint venture. They will put content from ESPN, TNT, and Fox Sports on a new standalone app, and in the process, likely to shake up the world of TV sports. 3 media giants are slated to launch this app in the fall. Pricing will be $20 to $30 a month. The same as Fubo. Massive competition. As for Fubo's financial, look at the gross margin, bro. It's like Tattooed Chef level. 3% single-digit gross margin, meaning Fubo has no moat in this arena. Fubo is losing no less than $200 million in a good year. How long until Fubo is run out of cash? It only has $200 million cash left, but it has $400 million in debt. Poor balance sheet, lousy margin, unprofitable, but Jeremy said it's growing at 40% per quarter, bro. and it's going to 100x, bro. Beach, please. You have to get to 100% gain before 10,000% gain. I think Fubo is likely the next tattooed chef stock if they are not careful. How Disney is turning a corner. DIS stock is surging higher. Look at that big gap up, green candle. Beautiful. The Walt Disney Company reported Q1 earnings per share were $1.22 compared to 99 cents that were expected. So profitability is clearly up. Disney Plus now has 149 million subscribers. Disney expects a big bounce back in Q2 with an addition of 5 to 6 million subscribers. Disney provided guidance for the 2024 fiscal year that is well over Wall Street estimates, and it's boosting its dividend by 50% while starting a new $3 billion stock buyback plan. Disney also said it will invest $1.5 billion in Epic Games and plans to stream superstar Taylor Swift's concert movie in March. Last night I listened to the conference call. It was really exciting and bullish. Right, Ted? We listened to the earnings call. That was great, right? Oh yeah, that was good. He said he liked the earnings call. Bob Iger turned back the clock and decided to make this earnings call an eventful one. It was filled to the brim with new developments at the studios to strategic partnerships. Iger declared that the Mona Disney Plus series was being retooled into a sequel for theaters. Iger also announced that Disney was investing $1.5 billion into Epic Games, the creators of Fortnite. So now gamers will be able to use content and characters in Fortnite from Pixar, Marvel, Star Wars, Avatar. Imagine Iron Man fighting Darth Vader in the Disney's metaverse. That time is here. Epic Games and Disney will collaborate from here on out and create new games and entertainment universe. Iger described it as a gigantic Disney World a la Fortnite. This is Disney's biggest entry into the world of video games. That Fortnite Disney World is likely going to be on Apple Vision Pro 2. Iger announced that the flagship version of ESPN would be available DTC come fall of 2025.
It is a different product. It's singular in that it is ESPN. It will have many more features and provide a much more immersive experience for the sports fan. We'll have features like integrated betting, fantasy, much more personalization, customization, probably some shopping in some form, much deeper in statistics and those sorts of things, kind of the sports lover's delight.
Iger also said the new sports joint venture with Warner Brothers, Discovery, and Fox was a major win for sports fans. This new sports app exemplifies Disney's ability as an industry to drive innovation and provide consumers with more enjoyment and value as part of a differentiated sports-centric service. Iger pulled a classic one more thing during this opening remarks. He revealed that Taylor Swift, the Eras Tour, Taylor's version, will premiere on Disney Plus on March 15th. Whether you like Taylor Swift or not, there's no denying she's a lightning rod for cultural conversation. I'm sure there were a lot of suitors for this film. Disney once again solidified Disney Plus as a place for musical events. Iger also touted that the Eras Tour film will include exclusive content and songs that weren't featured in the theatrical run or in the film's digital release. Iger then did a rundown of Disney's 2024 theatrical slate, which Disney seems quite bullish on. The slate includes Deadpool 3, Alien, Romulus, Mefusa, The Lion King, Young Woman, and The Sea, Mona 2, and so on. Disney's experiences brought in $9 billion for the first quarter. Walt Disney World had a modest decrease in revenues and higher costs due to decreases in attendance and overall inflation. Disneyland Resorts results were comparable to the prior year quarter, as revenue growth was largely offset by an increase in costs. Disney Cruise Line continues to dominate. Shanghai Disneyland did well with the opening of Zootopia. Hong Kong Disneyland did well with the opening World of Frozen. Disneyland Paris results were comparable to the prior year quarter due to inflation and the fact that Disneyland Paris' 30th anniversary took place last year. Consumer products results saw an increase due to licensing growth and higher sales from products based on Spider-Man and Mickey and Friends, and that the company will prioritize dividends and share repurchases in the coming years. The dividend will be 45 cents a share payable in July 2024. Disney is also targeting to repurchase up to $3 billion of Disney's common stock in 2024. Disney CFO Hugh Johnston said that Disney Plus will begin its password sharing crackdown this summer, but the program will allow users who are borrowing an account to either set up their own subscription or to pay an additional cost. He noted how it benefited their competitor, Netflix, and he sees the value in paid sharing. Disney expects to add 5 to 6 million Disney Plus subs in Q2, and they still expect streaming to be profitable by Q4 of this year. Then what are they going to say about Disney except for treating Disney like a world-class tech company should? If you think Netflix is a tech company, then why not Disney? CFO Hugh revealed that 70% of the $60 billion investment into Disney experiences was earmarked to increase capacity across the globe. Iger said they are hard at work determining where they will place a new investment across the Disney parks. Iger noted they are building 3 new ships for the Disney Cruise Line, and that the business is extremely positive to Disney. Marvel Studios is starting to focus on some of its stronger franchises going forward. Iger then said, "I'll leave it at that." It will be intriguing to see this come into focus, but I do think it means we're going to see Spider-Man and Avengers films in the near future. It will be interesting to see what Disney and Marvel Studios consider stronger franchises in the MCU these days. Iger was once again asked about Disney's relationship with Epic Games due to the demographic trends. Iger realized that Disney needed to get in on gaming and meet the younger generations where they were. Iger said that he knew Disney had to be in gaming. Disney also has skin in the game as they are investing $1.5 billion into Epic Games. This partnership looks to be transformative for both Disney and Epic Games.
Strauss, I just wanted your opinion on this recent Disney and Epic deal.
Creating a Fortnite/Disney ecosystem, and I don't know exactly what that means, but I'm not betting against my friends at Epic or Disney, and I wish them well.
This seems like a very desperate move by a very desperate Disney whose stock price has massively underperformed for the past 5-10 years, and they're trying to do whatever they can.
So I guess it remains to be seen, but they're 2 fine companies, and we'll see how they do with it, but I'm certainly not betting against them.
You couldn't pay me enough to go in there and run that. Heck no. Heck no.
Just 1 year ago, we outlined an ambitious plan to return to a period of sustained growth and shareholders' value creation. And our strong performance this past quarter demonstrates we have turned the corner and entered a new era. Iger said, "Now we wait to see what happens on April 3rd at the annual shareholders meeting. And let's not forget to see how Fubo meets its maker." But for now, Iger and Mickey should feel pretty good with what they are able to pull off here.